The buy, refurbish, refinance strategy is an incredibly attractive method for building wealth through property investment in the UK. It revolves around the concept of purchasing properties in need of refurbishment, improving them to add value, and then refinancing based on the newly enhanced property value. This enables investors to unlock equity, which can then be reinvested into further property deals, allowing them to scale their property portfolio rapidly without continuously having to inject personal capital. The process, when executed well, offers a straightforward path to growing your property investments and maximising your returns. The first step in the BRR strategy is crucial: choosing the right property. Not every property is suitable for the BRR approach, and selecting the wrong one can eat into your potential profits. The key is to find undervalued properties, either because of their condition or because the seller is motivated to sell quickly. Properties that need renovations but are priced below market value present an opportunity to increase their value through refurbishments. Location is just as important as the condition of the property itself. Ideally, the property should be situated in an area with strong tenant demand, good rental yields, and the potential for capital growth. Areas undergoing regeneration or infrastructure improvements often present the best opportunities. Be sure to research the local market carefully. Look for areas with good transport links, local amenities, and ongoing or planned development projects. It's also critical to assess the property's condition. While it's tempting to buy the cheapest option, a property with extensive structural damage or outdated plumbing and electrical systems could end up costing more than expected. Always carry out a comprehensive property survey to assess the extent of the work required and avoid costly surprises after purchase. Once you've acquired the property, the next step is the refurbishment. This is where you can truly add value, and with the right approach, you can achieve a significant return on your investment. The goal is to enhance the property's appeal and functionality while keeping renovation costs under control. Focus on high impact areas like kitchens and bathrooms and living spaces, as these are the areas that typically yield the highest increase in property value. While it might be tempting to splurge on high-end finishes, it's important to balance the quality with cost effectiveness. Opt in for mid-range materials and fittings that align with the local market demands and are appealing to your target tenants or buyers. Also, remember that time is money. Delays in the renovation process will only increase holding costs, such as repaying back the money you borrowed to buy the property with, and insurance fees and utilities and taxes and so on. Effective project management is key to keeping things on track. Work with experienced, reliable contractors who can stick to the budgets and timelines, and always set aside a contingency fund for unexpected costs. And the final step of the BRR strategy is refinancing. After the refurbishment, you will likely see a significant increase in the property's market value. Refinancing allows you to release the equity tied up in the property and reinvest it into new deals. The refinancing process generally involves securing a new mortgage based on the post-refurbishment value, typically at a 75% loan-to-value ratio. For example, if you buy a property for £90,000, spend £20,000 on renovations, and the property is now worth £150,000, you could refinance it at 75% loan-to-value, which would allow you to borrow £112,500. This could cover your initial purchase price and the renovation costs, leaving you with your original capital to reinvest into another property. The key to successful refinancing is ensuring the property has been refurbished to a high standard that justifies the new valuation. The BRR strategy offers an excellent way to scale your property portfolio, but it requires a methodical approach at each stage. Due diligence is essential. Market research and understanding the local demand for rentals or sales in the area will set the foundation for your success. Additionally, conducting a thorough survey of the property will help you estimate renovation costs and avoid unforeseen expenses. Managing your cash flow is equally important. Refurbishments often take several months, and during that time, you'll need to cover construction costs, holding fees, and possibly loan repayments. Keep track of your financial commitments to ensure that you don't run into cash flow problems. Another consideration is the tax implications of refinancing and property sales. Depending on the way that your investments are structured, you may face capital gains tax when selling a property or limits on mortgage interest tax relief. It's advisable to work with a tax professional experienced in property investment to ensure you're staying compliant and optimizing your tax strategy. Finally, having a long-term plan is crucial. The BRR strategy is designed to help you scale your portfolio quickly, but it's important to have a clear vision for the type of property portfolio you want to build. Whether your goal is to generate steady rental income, focus on capital growth, or flip properties for profit, knowing your objectives will help you make more informed decisions and measure your progress. The buy, refurb, refinance strategy is a powerful wealth building tool for property investors in the UK. By purchasing undervalued properties, refurbishing them to increase their market value, and refinancing them to release equity, you can recycle your capital and scale your portfolio without relying on additional personal funds. This strategy allows for rapid growth and maximizes the potential returns for each investment. However, success in the BRR strategy requires careful planning, diligent research, and effective financial management. By selecting the right properties, controlling renovation costs, and refinancing at the right time, you can unlock substantial value and accelerate the growth of your property portfolio. It's important to stay focused on your long-term investment goals and manage each step with precision to maximize profitability. With the right approach, the BRR strategy offers a proven method for building significant wealth in the UK property market. And as always, guys, thank you very much for watching. I appreciate you for being a subscriber, and I'll see you again on the next one.